Hey there, welcome to the channel. So today we're going to look at the stock market and kind of just some thoughts on the situation with Ukraine. Okay, so when we look at what was going on in the S&P 500, we see that we really had very strong days at the end of the week. So we had this really strong bar on Thursday and a really strong bar here. So this thing really put up a couple of days of strong rallies. And as I talked about in one of my previous videos, how we can go back in time to the previous Gulf War, and we see that the stock market had done in those cases had basically launched into rallies or continued rallies on the war going hot. So it's very sad in a way, but that's kind of what we've seen precedents for. Now, the question is going to be, is this the start of that? Is this, that opening rally when the war actually started? Is this going to hold? Is this going to, in this case, continue our bull market, and continue to go up? That's kind of the question. One other thing to note is the first day on the rally, the day the war started, very, very strong, heavy volume. But then the next day, the volume really dropped off a lot. So although it's confirming it in price, the volume has dropped off a little bit. So what we have right now, if we look at it, kind of a little bit head and shoulders, kind of have a little head and shoulders in the S&P. We kind of have this kind of a shape, and it's not necessarily a great shape, but you can see right around this 425 is this what we call the neckline. But we don't need to even call necklines and all that. You just have an area of support here, and we just broke through support and came back above it. So at 425. So we'll see what's going to happen here. This really is the question. That's why this week will be a pivotal week from the stock market point of view for sure, because it's going to tell us a lot. The question is, are we, kind of having a little downtrend forming 1, 2, 3, if we come up into here, if we're able to rally a little in here, but then fail and start coming down, we'll see what happens. Then that might tend to form that we actually have a downtrend forming. If we're able to break through, and then we really got to break through these too, then we can really be like, okay, we're back to returning to our uptrend, and everything that's happened maybe was just a little correction. So that's kind of pivotal for this week. And that's SPY. Looking at the Qs, similar type of situation, but just note that they corrected more. So for it to get back over the previous high is going to take more work, because you really got to get over that at some point. But you can take time to do that. That's fine. If we look at the Dow Jones Industrial Average here, see what that's doing. Similar kind of picture, similar kind of head and shoulders type of looking thing. And it's not perfect by any means. One thing I wanted to do, if I looked at going back to 2008, this is not a great one, but it's sort of like a little bit of a head and shoulders that did form out up in that top in the 07, 08. This is on the daily chart. So kind of interesting to note that, first of all, this is a year here, right? So this is, a year. This is another year. So this is a fairly long-term chart here, just so you kind of keep that in mind. You had this kind of move here is like the whole head was the whole year of 07, just in this picture of it, which is just an interpretation. It isn't necessarily real. But the issue is that in this case, we have like an uptrend going. We're in this uptrend, and then at some point it just stalls out, and we have, a pullback. And in this case, you had this support areas here that formed, and then they just broke. And once it broke, everything else that was coming into play happened. In this case, what you can do is you can measure the move of the head. So you take approximately your neckline and you go to the top, and you can measure that. And that's what I'm doing here. So that it was like 118 to 96, and you take that at a move of 22. Then on the downside, you could take, okay, well, you're going to move 22 down from the neck. So in that case, you're looking down. How much did you actually move? Well, you moved actually a little more. You moved 44 from 96 to that very low, but that you weren't there for very long on that low. So that's kind of how that one kind of shaped up. Are we in that kind of situation? Not clear at this point. Really quick, let's take a look at the Russian market here. It really did, this is on the weekly chart, really got the crap kicked out of it, down 30%. One of the things I'll look on a more short term here, the RSX, VanEck Russian ETF here, once again got beat up, but did recover a little bit, not much, but a little bit on Friday. this thing, for it to recover now, you have a lot of issues with, serious overhead resistance now, these huge gaps. So it'd take a lot of work for those to recover on that. Now, one other thing, let's look at ARC, just and the speculative play, similar to the other charts, potentially have this kind of, and it's kind of a short-term downtrend. And, we have to see, we're coming up, is this rally going to continue? Is it going to, rally up and break above the recent highs such that this now becomes like a W and we're potentially working our way out into reasserting the trend? Or is it going to, hit this wall and just bounce off it some way like that and start going down? And it could, obviously do a million different things, but it could do all kinds of stuff. So we'll have to see about that. So one thing I was thinking about too is it really interesting that the Ukrainians are really putting up a fight. So more power to the Ukrainians in this thing. But one of the things is, it's kind of interesting. You have this dichotomy where you have like the West has not put troops in, send some arms in, okay, but we're really afraid of getting involved in terms of putting troops on the ground. So we've had all these sanctions. Much of these sanctions seem to be kind of garbage. It's like, okay, sanctioning leaders for, so what? They can't buy a Ferrari or whatever. It just makes no sense. Now that finally looks like, as of this speaking, where I'm on Sunday night, the 28th, I believe. And what's going on is, now they're finally getting into the SWIFT system. Okay. So they're actually like sanctioning and kicking out some of the Russian banks from the SWIFT system, but supposedly they haven't kicked out all of them. Now, the question is, well, why is that? Well, the situation is that Europe really relies on natural gas from Russia. And not only that, I mean, much of the world relies on the commodities. Russia is a big commodity producer. So what they're doing is they're like trying to punish them by doing that, by basically taking some of the banks out of SWIFT. But what they're most likely doing is they're not doing all of them. It's the ones that are involved in actually paying for the natural gas going into Europe. They're not sanctioning those because they need that to keep going. So you got to understand that there's a little bit of restraint here on both the sanction side and the receiving side. So let's go look at the current situation in terms of natural gas. Now here's these arrows, this shows, and these are all the pipelines going through Ukraine right now. So you can see that this natural gas, like all this stuff is going through too. It's going into Moldavia, it's going into Romania, Hungary, Slovak, Poland, which is all going into Europe. So Europe is heavily reliant on this. And this gas is all coming from Russia and Belarus, associated with Russia, and it's all coming through Ukraine. So a couple of things about this. First of all, what you have is you have a situation where, okay, the natural gas, they're the supplier. They're the supplier for like Europe, supplying like it's something like over 50% of natural gas. Secondly, Ukraine is the transit hub for all this. This is where a big chunk of this natural gas is going. Second thing to note is that we have this brand new Nord Stream 2 pipeline. This is going to connect Russia directly with Germany and increase the capacity. Now, what's interesting is there's a Nord Stream right next to it. So there's still an existing pipeline there. But this is the one that they're freezing, the Nord Stream 2. They're freezing this right now because of all the Russia's invasion of Ukraine. So a couple of things, and then you can see Belarus. And so in Poland over here, Lithuania, Latvia, all this. And so in the previous map, you could see that we were on the lower portion. We were below here looking at Ukraine. So now we could start to do some game theory here. It's very clear that Russia would like to continue selling natural gas. So if we go to this chart, if you're Russia and you're selling natural gas, and as an example, George Gammon had a guy on and they were like, on that particular day when Russia first started the invasion, for example, it was approximately 270 million of transfers in SWIFT going to Russian banks. 270 million, and this was for nickel, metals, natural gas, oil, etc. So the scale of it is very large. So here's the thing. If, let's say, the Western powers say, look, we're going to cut you off from SWIFT, everything. Okay, well, day one, if they did that, Russia would have to shut off all the natural gas, right? So, for example, if they're selling 50 million euros worth of natural gas to Europe a day, and you cut off the payment system, then Europe has no way to pay. No one has any way to pay for the gas, so they immediately have to shut off the gas, right? It's just like done, fait accompli. It's just done. They have to turn it off, right? Because they're not going to get paid for it. Conversely, Russia could just turn it off, whether they're on SWIFT or not. Now, if they do that, then they're not going to get paid, right? So you can see that they're not turning off the gas as of this point. By the time they're recording, maybe that will change. But at this point, they haven't turned off the natural gas because they want the money, right? So there is this kind of detente going on behind the scenes. Now, one thing that I want to keep in mind is that, all this natural gas is transiting Ukraine. And, if natural gas transits, and, I was a little familiar with this type of thing in oil and gas wells, natural gas wells in the U.S. When you have a well, and we actually had one that produced really well, but you had to pay for transportation, and there's all these gas pipelines all over Louisiana and Texas, but you have to pay, not a lot, but you have to pay something to hook up into their system and deliver your gas. And if you can't deliver your gas, you can't get paid for your gas. Same kind of thing here. So you can imagine that Ukraine is getting a bootload of money for transporting this gas. So now we have the setup. I would imagine that Russia would like to directly just use Nord Stream 2 to deliver directly to Germany, right? Because then they wouldn't have to pay as much in transit taxes. They wouldn't have to pay any transit. Whatever the agreement between them, those two are going to have the agreement to send the gas out there. This pipeline is not going through any particular country. So therefore, I would assume lower transit tasks. So they prefer that. So now, right now, it seems like this is not going well for Russia. It's taking a lot longer than they want. They're getting a lot of people killed. If you go on like some of these YouTube channels, you can see a lot of destroyed Russian stuff. And so this is going really slow. So now, what would be a precedent here? What could be a real danger? Well, one of the dangers is Russia could shut off the gas. That's one thing they can do. The other thing that they could do is they could blow up the pipelines. See, the problem is if they shut off the gas and they leave the pipelines, then okay, they create that problem. They lose the money, right? But it just depends on how mad they get, how rough the situation is. At some point, if they say, hey, look, I'm pissed off, I'm going to shut off gas for a week. Oh, and then we're going to turn it on. And, maybe that's what they do. Now, another option that they have, which is the nuclear option, is what happened in the Gulf War with Saddam Hussein when he was leaving and he was exiting and he was being forced out of Kuwait. What did they do? They blew up 700 oil wells. They blew them up, just created environmental disaster as well as economic disaster. Now, that's one thing that the world has to watch out for. Russia, can they come in here? What if they decide, look, this is a disaster. This didn't go our way. Screw this. We're going to blow up a bunch of these pipelines. If they blew up a bunch of these pipelines, yes, they don't get the money for the natural gas. But going forward, if they blow up a bunch of this infrastructure stuff, then they go over here and say, well, hey, this pipe is good. Now Europe is freaking out, doesn't have enough natural gas, is totally freaked out. Maybe they get really desperate. Maybe people are freezing to death. I don't know. It's sort of like, well, I know spring's coming soon. What is the thing there? So that's something that the world has to watch out for in this mess, because if they do that, obviously if they do that, if they blow up these things and create a disaster there, no one is going to want to do business with them at all, ever. So it seems unlikely, but we don't know how messed up this situation is going to get. If they go that direction and Europe becomes desperate, because natural gas, you got to do it in pipes. We have these ships where you can do it, but that's not easy to set up that infrastructure. So this could really turn into quite a mess. So that's just one thing I noticed on these maps to kind of keep in mind with this situation there. So going back to our stocks, the reason that the stock market has had this pullback that it's had thus far is because of inflation. Has anything now with the Russian situation in Ukraine done anything to reduce inflation? It hasn't. Has it done anything to make it worse? Yes, it's made it worse. It is only going to contribute to supply chain problems. It's only going to contribute to energy price increases, even though the energy price, as looking at the chart, is very temperamental. It was very short term. It's still in the high 90s, and nothing is that's happening is going to improve that situation. Matter of fact, it's most likely going to get worse. So if we look at this situation, does this mean this uncertainty, is this going to cause the Fed to not raise rates less? Well, they may back off a little bit, but it's only in the short term because they still have the inflation problem. And the inflation problem is going to get worse, not better. This, you look like the inflation numbers that are going to come in 2-3 weeks from now, a month from now, they're going to be higher because of this. So even if we were at the point where we were magically going to somehow get to an inflection on PPI and CPI, which we're really not. This is the PPI and CPI. Look at this thing, just solid up, except for like the cerveza sickness glitch. And what's interesting here is you look and the PPI is actually accelerating more than the CPI, it appears, and they're all kind of going together. You would expect producer prices, the price of the producers paying would kind of lead, but it doesn't seem to 100% be that case. And I'm not clear as to why. But the point is that everything that's happened, that's already happened, forget what happens now. They could go shake hands and sing Kumbaya and hey, everything's great and it's all resolved. But everything that's already happened is baking in more inflation over the next minimum, the next half year. So the Fed has to come back in. So if the market was correcting and going down and the prices of stocks are going down because the fact is interest rates go up, the net present value of the flows from that therefore has to go down. What is the result? So that's why I think this is really different. And so my guess, and this is not financial advice, is that after this thing, either this thing persists with persistent uncertainty, and or the Fed still has to raise rates. Either way, they still have to go ahead and raise rates. There's no way around it. All right, I think that's it for this one. Bye.